if Adam Jonas is correct and the multiple expands to 172.5, you gotta put in the half there, times my EPS target of $4.50, that would actually be Tesla stock at $776 by the end of 2024. Now, does that sound reasonable? Tesla stock got absolutely punished today, down about 2%. Now, here in this video, we're going to go over what changed. I mean, Tesla fell 2%. The crash does continue. Something had to have materially happened today, right? Kind of. We're going to go over what Adam Jonas just said about Tesla, and Gary Black says his whole argument is strange. We'll take a look at exactly why that is. We will also discuss if anything is different now heading into Tesla's earnings. If I'm more bullish or more bearish heading into Tesla's earnings following today's disaster. We do have news coming out tonight, technically after midnight, which is going to be insured registration units out of China. And that lately has been a pretty big catalyst for Tesla stock, and we'll talk about exactly why that is. We also have a little bit of economic data coming out tomorrow that could move our markets. So let's just say the work is cut out for us here in this video. Hit the like button and subscribe to the channel if you like this perspective, open and honest, transparent opinions. After all, I could be right, I could be wrong, but at least I'm not afraid to be wrong. Unfortunately, a lot of people are too scared to be wrong to share their opinions. I will never be that guy. With that being said, this is not personalized financial advice. I am subject to be wrong or right. You really shouldn't trade based on anything that I say. If you agree with this information or disagree, do what you will with that information, but you are the one responsible if you make money or lose money in our markets. So first up, again, Tesla stock had a rough day today, but you actually had a solid start to the day. Tesla stock hit as high as about $218 per share, then fell to a low of about $206 per share and closing a couple dollars above that. So it was a $10 move from the high to the low today. That's a pretty volatile day for Tesla stock. This is mostly because Adam Jonas, he has or had the highest price target on Tesla stock before today, cut his price target to $345 from $380 per share. Wall Street is something else, okay? Let's be honest. $340 per share, most of you guys would be happy with that in the next 12 months. I personally think Tesla stock can go higher than that. It really depends on earnings, what is announced and how earnings ultimately come out, what the demand picture looks like in 2024, and whether or not we do enter a recession. Those are all important narratives that will drive Tesla stock in 2024. Right now, there's a lot of uncertainty around all of those things. We haven't even heard from Tesla in 2024 so far. That changes on Wednesday when we get the earnings. Whether or not something good is announced or bad is announced is going to dictate how Tesla stock trades in the near term. But Wall Street, I don't think this is really justifiable to sit here and say, well, $345, well, that's not good enough. Sell the stock off 2%. The logic, I understand it. It just doesn't make a lot of sense within reason of where Tesla stock is currently. I mean, Tesla stock has already fallen heading into earnings about 22% or so from the low of the day today. Tesla stock has fallen about 22.3%. So it doesn't exactly have high expectations heading into earnings. That makes me a little bit more on the bullish side. But let's take a look at specifically what Adam Jonas with Morgan Stanley said today around Tesla stock. First up, he says Tesla in 2024, a challenging year for EVs, cutting estimates, price target to $345 per share. He says global EV momentum is stalling. The market is oversupplied versus demand. We anticipate Tesla's 2024 outlook to be cautious on volume and profitability. Our full year 2024 non-GAAP EPS falls below $2 to $3 or $345, including core auto business of $75. Tough sledding for EVs, but we remain overweight on AI and robotics optionality. So Adam Jonas believes non-GAAP EPS will fall below $2 per share in 2024. Gary Black writes on X today, he says, here's what's weird about Morgan Stanley's Tesla note today. Morgan Stanley's Adam Jonas has $345 price target, second highest on the street among 50 analysts who cover Tesla, but has cut his full year 2024 adjusted EPS to below $2. Wall Street's full year 2024 adjusted EPS is $3.82, which would be the lowest on the street. I am at full year 2024 adjusted EPS of $3.75, which assumes 2.2 million deliveries, 17% auto gross margins, excluding regulatory credits. To get to full year 2024 adjusted EPS of $2, I'd have to cut my full year 2024 deliveries to 1.8 million. No change year over year, and auto gross margins to 10%. Jonas attributes just $75 per share of Tesla value to his $345 Tesla price target to Core Auto. The Morgan Stanley sales team will have a hard time with this call. How does your Tesla analyst have the lowest full year 2024 adjusted EPS estimate, but the second highest price target on the street? This was before the stock fell. Gary Black says probably why the stock isn't down. And the last point, Tesla's IR assured me this morning that, quote, we don't speak with analysts during the quiet period. So any insight Jonas has on Tesla's full year 2024 outlook, he got on his own. Now, Tesla's PE ratio is 66.64. A little too many sixes for my liking. Hopefully that's not a bad juju out there. But nonetheless, let's put this into a little bit of context. If Adam Jonas is correct, and he's calling for Tesla stock to hit $345 per share, again, I wouldn't argue with that. I actually think that's going to happen again, but not with $2 of EPS. For that to actually happen, for Adam Jonas to be correct, $2 of EPS and Tesla stock at $345 per share, that would mean the multiple would have to about 3x from where it currently is to 172.5 times. I don't think that happens. I'm pretty generous with my estimate of 100 times PE multiples. And just to reiterate, for those of you guys that might not watch all of these videos that don't know my stance on Tesla in 2024, I believe Tesla's EPS could come in around $4.50, which is about 70 cents higher than the average Wall Street analyst that covers Tesla. So it is on the higher range, but I don't think it's unrealistic. Tesla typically beats EPS estimates every single quarter anyways. So that would be Tesla beating by like 10 cents a quarter every quarter in 2024. It's not too unrealistic. $4.50. I assign 100 times PE multiple to that. That puts Tesla stock at $450 by the end of this year. That's my logic. That's my reasoning. As long as we avoid a recession, that should come true. But if Adam Jonas is correct and the multiple expands to 172.5, you gotta put in the half there, times my EPS target of $4.50, that would actually be Tesla stock at $776 by the end of 2024. Now, does that sound reasonable? Not really. So where is Adam Jonas getting his information from? Does he assume some kind of breakthrough in AI? Licensing of FSD, a $25,000 vehicle coming? Is that where we get the multiple expansion with a lower EPS that justifies Tesla stock trading at 172.5 times multiples? I don't know. But that could perversely be a very good sign of maybe something to come. After all, Adam Jonas is playing some wonky math here, or he's expecting a massive multiple expansion. I don't know. Let me know what you think down below in the comment section. Adam Jonas goes on to say, further price cuts. Tesla has already announced price cuts in China and Europe that have matched or exceeded our prior expectations of price reductions for the full year 2024. The German Tesla price cuts came merely days after Tesla announced production cuts at Giga Berlin related to Red Sea shipping issues. Lower production is usually positive for prices. This suggests the European EV situation is changing quite rapidly. He goes on to say expiration and weakening of EV incentives. Fewer vehicles vehicles are eligible for IRA incentives given foreign content/local sourcing rules. Our teams anticipate further weakening and dilution of customer EV initiatives globally as governments reassess budgets. From an auto lens, the future of the IRA appears increasingly uncertain. He goes on to cite excess capacity in China. Our team, led by Tim Hazio, notes cannibalization from a strong year-end sales push, along with the expiration of certain local stimulus measures and likely earlier CNY homecoming, along with economic pressures, have offset auto OEM dealers' promotional efforts. China battery analyst Jack Liu noted China battery inventory rising to 4.2 months and noted that CATL, who can still sell LFP cells at $80 a kilowatt hour, is one of the only battery makers generating a profit. He also cites residual value risks as OEMs' price cuts have driven continued downward pressure on EV residuals. Supported by dealer commentary, residual value volatility hurts the value proposition for customers and creates uncertainty around leasing partners who don't want to hold the risk. This is essentially like Hertz. They bought a lot of Teslas over the last couple of years, and Tesla cut prices a lot, so now they're way upside down on the vehicles that they purchase. He goes on to note that fleets are cutting their EVs like Hertz and what I previously just mentioned. He also says China slows EV exports, citing slower demand. China has said it will rein in EV exports. Apparently, Adam Jonas is also citing, quote, other signs of demand challenges. We hear anecdotes of consumers shifting away from EVs to go back to ICE vehicles. Others are looking to buy a used EV from online sites or dealers, a trend which may not be good for near-term penetration. That is very anecdotal. That could be, what's the sample size of that? Right? Did you ask people at a mechanic shop whether or not they're looking to buy ICE or electric vehicles? Did you ask someone at a, Democratic convention what they're looking to buy? Obviously, you're going to get various different answers there. I would take that with a huge grain of salt. Adam Jonas also says that they have been getting a lot of questions on political risk, where Donald Trump, just for an example, won 51% of the votes in the Iowa caucus, and what the implications would be if he won the presidency. Would some of the push towards EVs, like the IRA tax credit, get rolled back? And Morgan Stanley says, quote, we believe such a dilution/slow rollout of EV incentives is already in our base case, regardless of the outcome of the election. So he thinks no matter who is in office, you're still going to see less accommodations for EV vehicles as we go through the months ahead. Whether or not that ultimately happens, we'll have to wait and see. Adam Jonas says our theory on Tesla is that it is both an auto stock, an energy company, an AI and robotics company. In fact, our valuation of the core auto business at $75 a share represents just 22% of our $345 price target. Negative developments in the EV global market very much matter to Tesla and should reasonably have a negative near-term impact on the price of the stock. At the same time, however, we believe investors should ignore the continued developments of Tesla's other bets, many of which are auto-related. The recurring revenue opportunity from the Tesla fleet embedded in our Tesla network services valuation, and other areas that we do not include within our $345 target, but that the market may include via Optimus, which we expect to learn much more about during 2024 Tesla's AI Day, and that day is to be determined. Looking ahead, we are approaching maximum market volatility on EVs. We believe the trough may happen towards the later part of 2024, with the EU Parliament and US presidential elections part of the equation. On Elon Musk's discomfort of having Tesla move into AI without 25% voting control of Tesla. Tesla is the only truly AI-enabling stock under our coverage. Our overweight thesis and top pick status is highly dependent on Tesla accruing value as an AI enabler. Any change of organizational or legal structure that impedes Tesla's ability to participate in the development of AI could be detrimental to the overweight investment thesis. We expect this topic to receive significant attention on Wednesday's analyst call. Key changes to our full year 2024 earnings forecast. Wow, check this out. Unit volume cut to 2.08 million units from previous 225 million units for year-over-year growth of 15% versus 24% growth previously. So they are expecting not so great guidance for full year 2024. On pricing, Morgan Stanley assumes ATPs fall 5% year over year in full year 2024, prior estimate of down 3.7%. ATPs include positive mix impact of 26,000 units of the Cybertruck delivered this year. On auto gross margins, excluding ZEV credits, we lowered our full year 2024 gross auto margin estimate slightly to 12.8%, down from 17% in full year 2023, and a peak of over 27% in full year 2021 and full year 2022. So this number was at 16.3% last earnings. If that falls to 12.8%, $345 price target makes absolutely no sense because Tesla stock, maybe it's already priced for that. Maybe, who knows? It's priced for 10% auto gross margins. Who knows? Honestly, at this point, Tesla stock's fallen 22% in a very short amount of time. You may be priced for something way lower than what the markets are currently pricing in. That's very much a possibility. But Morgan Stanley expects auto gross margins are going to decline still from here over 3%, which on face value would likely not be great news. On operating margin, US GAAP operating margin moved to 5.6% versus 6.4% prior, which is down from 8.9% in prior year for full year 2023. So they're expecting like a 30% reduction in operating margin. EPS estimate cut to $1.98 versus $2.41 previously, and is down from our current full year 2023 estimate of $3.02. We forecast recovery of non-GAAP EPS to $2.96 in full year 2025, $6.32 by full year 2027, and $13.89 by full year 2023. They are like massively cutting everything here. Like, this is not small. So again, back to this problem. Because how do you get to $345 per share without significant margin expansion or, PE expansion here? I don't really know. That is unquantifiable to me. I can't make that make sense unless we avoid a recession. Tesla has grand prospects on something else down the line. I just don't know if one day the markets wake up and see the potential of robotaxi or full self-driving or energy and storage. I don't know what it is, but there is a huge disconnect here between the price target at $345 and an EPS estimate in 2024 of $1.98. That makes no sense at all. Because, take a look at this. If Tesla trades at the same multiple that we're at, 66, and if Morgan Stanley's correct of $1.98, that would put Tesla stock at $130, almost $131. That is way off of $345. So maybe there's something they know that we don't, but that's strange. Free cash flow cut to $4.9 billion from $7.2 billion previously. Like, that is almost a $3 billion reduction of free cash flow. That just doesn't make sense. Where are they coming up with these numbers from? Morgan Stanley says our bull case valuation now stands at $500 per share over the next 12 months, down from $550 a share previously. So this is why Tesla stock fell so much yet again today. Let's just summarize this. Wall Street's expecting around 2.1 to 2.2 million deliveries for 2024. The biggest bull on Tesla stock expects 2.08 million deliveries, less than what the average sell-side analyst has for Tesla stock. Let's get this correct. Morgan Stanley expected 7.9 billion of free cash flow. Now they're expecting under 4.5 billion of free cash flow. Huge reduction there. EPS, they were expecting $2.41. Now they're expecting $1.98 of EPS. You would have to see crazy multiple expansion to see Tesla stock do well in 2024. Whether or not that happens really comes down to a recession or not. So I would love to get Adam Jonas in a room or on a call here, or some kind of podcast, to ask him, like, how do you actually get to $345 per share with your estimates? That doesn't make a whole lot of sense. Auto gross margins, the thing that the markets truly care about. They were 6.3% last quarter. A lot of Wall Street is expecting that to boost up to 17. Morgan Stanley and Adam Jonas says, yeah, you're going to fall under 13% auto gross margins in full year 2024. That would mean a lot more price cuts to come. My mind has a hard time grappling with this one right before earnings, because either they know something that we don't, because those are huge reductions, or they're trying to get ahead of it before we actually get to earnings. But at the same time, if they're implying Tesla's multiple could 3x itself in 2024 over the next 12 months, then that means one thing and one thing only. As rates come down, as we avoid a recession, that means the markets will start to be more comfortable with paying more for every dollar or cent of Tesla's earnings, meaning that would be licensing of FSD, that would be the Optimus, that would be Robotaxi, that would be, other initiatives, $25,000 vehicle, something would have to be announced, and you would have to see some kind of progress there, because investing in a stock is all about what's going to happen. It's not about what happened already. So if you're going to sit here and say, I'm willing to pay 3 times the valuation on Tesla stock by the end of 2024, something changed. Right? Something changed for the positive, especially if the business fundamentals are getting worse. That's why a lot of stocks did well in 2021 that were bad companies. They had high promises for the future. Fed funds rates were very low. There was not a better place to put your money. Well, in that scenario, when Fed funds rates are low, 10-year treasuries are low, then maybe you're getting paid 1 to 2%. It makes longer term earnings more attractive. Because, for an example, if you buy a 10-year treasury for 5%, over the course of 10 years, you're going to make 50% and your money back. If 10-year treasuries are 1.5%, you're going to make 15% and your money back over the course of 10 years. Can you beat 15% in Tesla? Well, obviously. I mean, I'm not a fortune teller here, but that sounds pretty reasonable. 50% over the next 10 years. What's the risk to reward on that with a risk-free asset like 10-year treasuries? That's the thing. So if treasuries come down, certain things go right for Tesla, FSD, Robotaxi, whatever it is, that could be good news. The EPS could fall as well, as Morgan Stanley says, because Tesla invests more. And that could make sense to potentially get a higher multiple, but Tesla would really have to be aggressively investing in other areas for that to make sense to me. So I'm expecting something huge coming this Wednesday on the earnings call. If Adam Jonas is correct here, so is he. So let me know what you think about this down below in the comment section. Now, my personal opinion is I think this is a off-the-wall kind of change. I did not expect this from Adam Jonas. And when I first read the report earlier in the video today, I did not expect the reductions in which the way we've seen them. Now, to my knowledge, that makes sense why Tesla stock is down today, why Tesla stock hit a new low for 2024 today off of this information, because the cuts were just so dramatic. And this was from the biggest bull on Tesla stock. The highest price target on Tesla stock before today was Adam Jonas. Next up was $350 by Dan Ives. To see estimates cut that much by the biggest bull, what do you think the bears are thinking? Right? So it makes sense why Tesla stock sold off. Now, in all reality, in the short term, what does this mean for Tesla stock? Well, expectations just dramatically got lowered. So I think heading into Tesla's earnings on Wednesday, you have a better likelihood of actually seeing the stock go higher. So long story short, I think this is actually great before earnings, right? If this had came out after earnings, probably not so great, but it does lower the bar quite significantly. Whereas even if we get really bad news on Tesla's earnings, you're probably not going to see an utter collapse like we see in the last 3 earnings, where Tesla stock has fallen more than 9%, less than 10% for 3 earnings in a row. I think the bar is very low at this moment in time. The markets have already priced in a pretty rough earnings for Tesla. So I personally remain very overweight on Tesla in the near term and in the long term. And I still do think Tesla stock could break above 250 by the end of this week, if earnings are as I expect them to be, not as bad as feared, and maybe we get some insights to FSDV 12, which has started to roll out, some updates on energy storage and some of the other projects that Tesla has going on right now, potentially the biggest news of all, which could be the $25,000 vehicle that could come by the end of this year or 2025. That's actually the number one most asked question by retail investors, is since Elon has changed the location of the $25,000 vehicle from Mexico to Texas for at least the first production of this vehicle, could it come by 2025? That's summarized the biggest question that retail investors are asking. That question will likely be answered, and depending on Elon's answer for that, if he does say it could come by the end of this year, markets will start to price that in, and I think Tesla stock could have a 20% day. Obviously, I could be wrong. Don't trade based on anything I say, but I personally have my money on the line that Wednesday is going to be a great day for Tesla stock. Now, tomorrow could actually be a great day for Tesla stock as well if we do get a good insurance registration number out of China. As Gary Black says, China insured registrations come out Monday night, and over the past 4 weeks, you've seen an average of about 8,700 registrations per week. Now, from select, a couple actually different X-based accounts that cover China, they've indicated that we might see strong registrations over the next 2 weeks. And believe it or not, Tesla stock has reacted pretty aggressively to good and bad numbers out of China since the start of 2024 and even the later part of 2023. That's because part of why Tesla stock has been falling recently is because everyone's super concerned about demand. Now, even if demand's not that red hot in 2024, I don't think it's going to be too terrible also. And I think there's certain levers that Tesla can still pull, like increasing advertising, things of that nature, to get the word out there more to boost their sales without necessarily cutting prices. But those weekly insurance registration numbers that come in good and come in strong really pushes back on the narrative of weakness in the EV market, right? Weakness as far as demand in the EV market. So I do think tomorrow could be a positive day for Tesla as well, albeit that's not a hard call to make when Tesla stock has been falling so much recently. Now, as I have said before, this week is going to be incredibly volatile tomorrow with Netflix earnings. I'm on the fence. I don't know if those are going to be good or bad. I don't know if I'm going to trade Netflix earnings. If you guys want to see any of the trades that I put on for earnings or for other different events, check out that link down below in the description of this video. I'll probably trade it in some capacity or another, but I don't have a strong sense of which way we're going to go as far as Netflix. Netflix will affect the broader market, so definitely one to be watching for. But then coming on Wednesday, Tesla earnings. That's your big story for earnings this week. Netflix, Tesla, those are going to affect the broader markets. But coming on Thursday and Friday, you have lots of economic data, GDP, durable goods, the ECB interest rate decision on Thursday, and then on Friday you're going to get PCE, personal income, personal spending. You're going to have a lot more clarity on how the economy is doing and how inflation potentially is doing as well by the end of this week. So that I'm expecting to move the markets quite a bit. But coming tomorrow, you do have an important data point. That is Richmond Fed Manufacturing Index. Now, why this is so important is because the New York Empire State Manufacturing Index 2 weeks ago came in at negative 43, the worst number we have ever seen minus the Rona. Now, expectations are that you're going to see a big collapse as well for Richmond Fed Manufacturing. If that is not as bad as what we're expecting, that's going to be good news coming tomorrow for our markets. The last thing you want is manufacturing indexes hitting all-time lows as the economy is perceived to be super strong, and expectations are for 2.4% GDP in Q4. I mean, if these are collapsing and they're for the month of January, Q1 GDP might not be that good, and we could be closer to a recession than we ultimately think. So coming tomorrow, again, insurance registration numbers out of China and this Richmond Fed Manufacturing Index. Those are going to be the two biggest things that will move Tesla stock and our broader markets tomorrow. Despite Tesla's rough day today, hedge funds and institutions are actually overall buying the dip in Tesla stock. You have seen 754 orders totaling $222 million with a positive order value of 61%. If you look at the entirety of the option activity we're seeing for this week, which again is the week of earnings, so it's more important than other weeks, you are seeing 59.5% of volume to the call side and 40.5% of volume to the put side. So majorly positive today. So I want to reiterate, again, for those of you guys that don't watch this channel every single day or all of these videos that come out, if Tesla has really bad earnings, I think downside is limited to around $190 per share, unless there was obviously something that was really, really bad in Tesla's earnings. I think you've priced in anything that is reasonably or remotely bad. It's really going to take more or less a black swan event coming on earnings to get Tesla stock to fall what I believe another 10% or so upon earnings. 10% down from here would put you at about $188 per share. I mean, to fall to, let's say, 180 would be 14% down. I don't think that happens unless you get some, again, black swan type news on earnings. I do think the risk to reward makes a lot of sense to the upside here. And I do think by the end of this week, I think the bears are going to be proven wrong and the bulls, despite what everyone thinks, are going to be on the right side of things. And 20% from here would put the stock at about $251 per share. That is still my estimate by the end of this week. This underperformance today and crash-like event today really does not change much. I understand why markets are fearful, but I understand the argument from Adam Jonas really doesn't make a lot of sense anyways, given his price target is $345. His EPS estimate is $1.98 in 2024. That is expecting some kind of big improvement with some of Tesla's initiatives and the market's providing higher valuations for longer term earnings, which typically only happens in a market environment where rates are really low and you can't get 4% on a 10-year treasury yield. So very, very weird. Let me know what you guys think about all of this information down below in the comment section. I think weird is probably the best thing or best word adjective to kind of describe this video. Just very strange from Adam Jonas. Hit the like button as well as subscribe to the channel if you guys want to come join the best trading community in the whole entire world. Check out that link down below in the description of this video. You guys enjoy the rest of your day. My name is Michael Tyler, and you guessed it, I will see you in the next one.